second, and then great. Okay, welcome everybody to today's session. The title: Exploring Alternative Trading Strategies, Unconventional Trade Entry Points. Now, one of the key reasons why I started doing this sharing session today is because I find that there is a change in the market, and due to the recent developments in economy as well, there's the uncertainty that's going around, and the actions of the central banks handling the inflation. There are quite a lot of changes going on in the market, and it caused certain asset classes to keep on moving in a singular direction. I think you all saw that even last night, situations whereby like the euro dollar, the pound dollar, they have incessantly moved towards a singular direction, or just one direction. So in situations like that, if you keep on trying to catch the bottom, you're trying to catch the bottom. Okay, this is the low, we are going to buy this low, even they do appear give you certain bullish price action. Sometimes they might not work. Okay, and sometimes, and worse, they don't appear at all, and that cause no chance for you to even attempt an entry. There are situations like that, and the worst case scenarios are the ones where they give you an engulfing pattern on the H1, and then what happens next is that entry is a losing one, but then it gives you a second chance again at the area that we're looking at, the same area. It moves down a bit just to take you out, and then it moves up again, and that second chance don't give you any engulfing pattern on the H1. So that was the story that we saw in the last, to be frank, in the last couple of months, the last 3 months. And this month especially, we saw a lot of that, and that led me to say, hey, I think I need to start giving people, sharing with them other ways that you can enter also. Okay, so that's what we actually I saw. So one of the reasons why I want to start it off giving up the H1 engulfing patterns and just rely on the 4, because it was easy to see. You just see that thing and then say, okay, this engulfing pattern, let's go for it. Easy to see, easy to quantify, and then you can publish that. Because the rest, that one of the techniques that I'll be showing next, right, that particular technique is more, it still can quantify, but sometimes what I say is that it is based on certain experience, but not to say that the kind of experience that you need so much. But if you've been trading just a month or two, then I don't see a problem would occur already. Okay, so we will approach this one at a time, slowly, and then hopefully you'll be able to catch it and understand. Now, first thing first, a few things. Before moving into the strategies, I want to remind everybody the power of certain patterns in the market. And I need you to really train your eyes to see this pattern, because without this, regardless, it's very difficult to trade for, especially for beginners. Okay, and if you really truly understand this pattern already, even your accuracy would increase. Okay, increase, and then we'll see. Okay, let me just go back to the basic again for everybody. Okay, now you need to really understand price action before you enter. You really need that. It is very, very crucial. Okay, because at the end of the day, this is the simple logic. If you are if we are looking for, let's say, if the general direction is a buy, Okay, let me just give me a second. I want to annotate. No, put out my trusty pen right over here. Now, look, if the general direction is a buy, okay, it's a buy. It's going to go up. Regardless, if I buy here, or I buy here, or I buy here, or I buy here, if the price eventually, okay, if the price eventually goes up, I still make profit, right? It's only the degree of profit. That's the one that differentiates the entries from here to here to here to here. Obviously, the higher the entry is, the less profit you make. Okay, so that is the key point I want to send out today. First, you need to understand what is it that's moving, and get to, we are trading towards the direction that's moving. Okay, now don't need to worry about this, is that are we going to buy, are we going to sell? Leave this heavy lifting to me. Buy from the reports. I'll do my research, and then I'll decide on the direction. You guys, your job is very simple. Okay, just monitor those areas and then attempt those entries. But the way you attempt the entry, that is the one that's going to differ this time. Yeah. So clear. So hold on. Just give me a second. I'm going to clear all again. Right. So your job right now, even before you read any report, today, open your chart, go and see what is impulse, what is correction. You need to know how to differentiate these two. What is impulse, what is correction? Impulse are areas where prices push up strongly or push down strongly. They represent money, because at the end of the day, I'm trying to look for areas where there is a lot of money coming in. Money is the one that moves the market, regardless of the asset class that we are trading. Okay, so when you see something that is fast, then you know that's impulse. But today, know how to master this one. Everybody can see, but this is the part where everybody will have a bit of difficulty. Now, always remember one thing, rule number one: the consolidation or the corrective move will always come after the impulsive move. Okay, I repeat, the consolidation move will always come after an impulsive move. So in other words, this is the key point right over here. Whenever you have a corrective move after the impulse, you will know that you have a high degree of chance that when this corrective move is done, okay, when this corrective move is done, the price, another impulsive move will come to take off the high of before this corrective move started. So in other words, if you were to enter over here, this could be the place where you know, of course you can, if you enter over here already, you want to take profit here, you want to take profit here, you want to take profit here, but it's fine. It's up to you. You decide. But I want to tell you one thing. My expectancy is for the price to break here. So if you want to take profit only here, then you want to take profit and break even the rest of your trades, it's fine. It's fine. This thing can go even higher depending on the report. It can even go higher, right? Because the reports here are based on wave system, and inside waves there are multiple waves upon waves upon waves, and waves are built upon the impulse moves and the corrective move to differentiate that this particular movement is wave number what. Okay, so this is one thing that I will do all this breaking down for you to know that this where, and potentially it still can go where. Okay, so remember this part. Now, let me see questions. Okay, as a question coming in, a very good question. Which time frame should we look to identify impulse and correction? Now, what you can do over here is that now I would go down to the 1 hour chart. Okay, based on what you read on the report, right? Look into the area. I will go to the 1 hour chart, and that will help you trading within the whole week. Now, if you want to trade longer, it would be the 4 hour chart. Then it's longer. It will take some time. Sometimes this 4 hour chart will take a couple of weeks to a month to hit your target, but it will be a bigger target. But my preference is right over here. But know one thing is that H1 movements will eventually lead to H4. And this will eventually lead to D1. Okay, smaller movements shape the bigger one to move over here. But like I said, leave the heavy lifting to me, so don't worry. It's very specific here. I've been using my reports before and attending the briefings already. So if I say look for buys, what you need to do, go to H1, and you see this kind of patterns like this, and then you just say, and then you go. Okay, then you look for your entries. It can be, which I'm going to share in a short while. Look for those entries and then go for it. Okay, I'm going to keep this simple. Okay, it basically is how to use the report only. Very, very straightforward, simple stuff. So I hope that answered your question. Okay, so next one. We'll move on to the next one. Now, just to give you okay, so these are the things that sometimes we must learn and understand and avoid. For example, I'll give you an example, right? Now, we have a lot of buying over here, very obvious buying, correct? I see a lot of buying. But the next thing I know, I'm seeing equal power of selling coming in. These don't look corrective to you, correct? Not corrective at all. So if you were to buy, when you see this, okay, it goes up like this, just because it goes up, you see what the market wants to do is this. It goes up, it breaks this area. So you are taught that, say, downtrends are like this. Okay, it breaks swings, it breaks swings, it breaks swings. So this one broke over here. And you become very excited already. You said, oh, it just broke a swing. So I should be entering right now because it's a change or possible change of structure over here. Okay, change of character. And I go like, oh, I'm going to enter. But next thing you know, you look at this. This is an equal power of selling coming in. And if you were to enter over here and saying that, hey, yeah, but just because it broke over here, you're going to enter over here. That, not to say it won't go up, it can, but I'm going to tell you one thing: equal buying with equal force of selling, there's also a possibility that a price will take out this low. And if you were to check the price of Hong Kong 50 right now, yeah, this low was taken out. So then how do you deal with this, right? So my advice is don't look for this kind of entries. Okay, there will be times that I will advise you, yes, even though like this, go for it. Okay, there will be times because this will be based on the wave. Okay, there are various ways they will trick you. They will do this to you in various ways. but there are only certain places, like for example, they have already moved already. You know that trend has been established already. Then in situations like this, no problem. Okay, so if you are not well versed with this kind of things, you just see if it's a strong movement up and then strong movement down, also equally strong movement down, your job, don't enter. That will save you a bunch of headache already. Don't look for buys. Okay, so what you want to look for is something like this, is that you see a very strong movement in one area, but when it's moving up, look at this. It's taking its time. That's the key point over here. It's taking its time to go up. Down again, it's taking its time. So whenever they take their time, you know that there will be one more down. There will be one more down coming in. Okay? So strong movements, not so strong movements. Strong movements, not so strong movements. Strong movements. Okay? So if you're, this thing may sound simple to you guys, but believe you me, you just understand this, it's going to help you a lot in your trading already. The question here right now is where you want to put your stop loss only. That's going to differentiate whether a person made money or lose money, depending on the strategies that they enter. Even though everybody is looking to sell, for example, if even everybody's looking to sell, but because your stop loss is placed at different strategic areas, you lose, right? So I give you an example, an assumption over here. I give you an assumption over here, yeah. Oh, I think this is higher. Okay, good. Now over here you have an engulfing pattern, correct? A bearish engulfing pattern, right over here. Now, so what happened next was that at this bearish engulfing pattern, this trade was taken out right over here. And then at this top, then it started coming down. So if you were to put your stop loss over here, then of course you will lose. But if you were to put your stop loss at the previous swing, you would have survived. But what's the difference over here? Is that your risk, you increase wiggle room for your risk only, right? That's the reason why today I want you all to have an idea to be a bit flexible. Flexibility is very, very important in trading, to be frank. Direction, no, we don't. In a way we have fixed the direction already. That's very important because trading, the direction don't change within minutes, within hours, unless there are big news coming in. Okay, but the way we enter, we need to be flexible. If something, if for the last like 3 months already, we see that this thing, if we've been using it, we've been making money from it, and suddenly in the last, it doesn't work for 1 month, yes, you can give it some time for it to do some more, do its thing. 2 months, still okay, but you are on alert mode already. Why is it not working for 3 months? Something may not be right. But after the 3rd month, I think you need to change, because I think that's enough time to say that, hey, something's not right. But that doesn't mean you give it up totally. Just monitor, put it in sideline, use a different way, because maybe at that period of time, different market participation, different market makers have come in, or more and more retail traders are using the same way to enter. Sorry, over here, using the same way to enter that the big boys are. So when a lot of retailers are doing the same way, there will be a big bunch of stop losses right over here. Stop losses pile in, and next thing you know, they see this, they want to take it out. So after they take it out, clear everybody, then only they come down. That can happen. Majority of retail traders are using this style then. Okay, so let's dive into the 3 ways to deal with this, entry. Now, rule number 1 is the type 1. I call it the type 1 entry. That's a standard entry that we have been using all this while. Easy for everybody to see, but unfortunately, that easy part translates that everybody also can see, and now it's changing a bit. That means we are only looking, based on the report, you look for bullish and bearish price action mentioned on the H1 time frame. Okay, so we only look for bullish engulfing morning star patterns for the buys. For the sells, we look for bearish engulfing evening star patterns for the sell. That one, I think you're used to it already. So stop loss is 1 pip below above the candle patterns. Target is up to individual traders with a minimum risk, minimum of 1 to 2. That means you risk 1, you make 2 reward ratio, and protecting your trades after hitting 1 to 1. And how some traders protect their trade, they take 50% off the table. You know, it's up to you how you all decide this thing, right? This was all the while this time, right? Hold on, there's a question coming in. If we trade 1 hour chart, previous swing, would we refer to higher time frame, 4 hour, or stop loss? If you're trading on a 1 hour chart, your stop loss would be also based on the 1 hour, not the 4 hour. Okay, because 4 hours sometimes can be a bit far away. But later on, when I talk about the various entries, right, we will discuss on the stop losses. That will help you answer that already. Okay, so this is the standard one based on the report that you all know all this while, right? All this while. Now, I give you an example. I'm only going to bring up recent examples because there's no point talking about something that happened in the past. Too long for behind, people forget. Now, this is just only like this month, within this last 2 months only. All right. So remember this gold thing. So my expectation for gold is this. It's moving up. And then I want it to come down again, take off this low, and then move up again, and then eventually come down. If you remember, this is my final inside my report. Those who've been attending this all this while, this is my final move, remember? So I've been looking for that for some time, but these things will take time to do. So the first thing first is that I said look for bullish price action at the 1910 or the 1900 area, right? So we will be looking for the buys here to move up. Then this will be a possible bigger consolidation before another drop again. So the key point here is another drop again later on. All right. So what happened next? We have a morning star pattern over here. You can see it closed above the previous opening price, or this is a 3 candle pattern over here, and then so from here it moved up. I think this trade would have returned you roughly 3 to 1 kind of thing, right? Now this is entry number 1. This was reported on the 30th of August in the report. If you have Aussie dollar correcting up, then look for bearish price action at 65 or 65.50. And then when Aussie breaks 63641, what do? Look for bullish price action at 63. Why did I say that? Because if you've been following, I said that I believe truly that the Aussie dollar will come near to 63 before moving, because that's the point. If they want to do any movements, they will be moving towards that. And today, if you see that, Aussie dollar is indeed moving towards the 63 areas. In fact, last night it went to about 63.30 already. We are seeing that's nearing to that point, right? So this same thing over here, but before it moves to that 63 area, it will come here first before coming down. Now, I want to ask you one thing. Okay, if it comes over here, this thing will look corrective or it will look impulsively moving up. Type it in the chat, let me know. Corrective, right? So corrective, what do you want to do next? You want to look for buys only or you want to look for sells? This is a question for everyone. If this is corrective, you want to look for sell, want to look for buy. Sell only. So you get my point right now. If you are only looking for sells, regardless if you just enter over here, enter over here, enter over here, enter, you don't even want to come to my place to enter. If you're looking only for sells, you will get it right eventually because right now price is down here. Right? So you won't go wrong. So the key point is what's going to differentiate between you making money and losing money is where you put your stop loss and how much you earn after that. So here is it. Now, if you look at this is one engulfing pattern right over here. It appeared there. Now, I always do this. Now, if I use the H1 entry, a plus, I always add plus minus 20 pips to the level. So if I say something like this, look for bearish price action at 65 area. So it will be either 64.80 minus 20 pips from here or 65.20. So if it's really within that region, I will sell. So over here is 65.30 to 65.70. Within that region, I'm going to sell. So there you see, it's at that level and then bum, it goes down. This is where it go, right? Now, I need you to remember this pattern also. I will revisit this in a short while. I want to show you one thing, okay? Because we have different ways to enter the market. Now, next one, this is another entry, especially for people who don't have time. When you don't have time, use this entry. Now, we use the Fibonacci entry over here and only enter, only choose between either the 50% retracement or the 61.8% retracement. So you put a pending order over here, or you do a market entry. At that level, you can wait for it to come down, do market entry. I like to do pending over here. Either 50, 61.8. Don't go lower than that, higher than that. I want a retracement at least here. Now the best would be here, 61.8. That would be my best entry. My favorite. Okay. Now, stop loss is the bottom or top of the swing. Your target is when 1 to 2 risk reward achieved, you can still maintain this, or when the swing high or swing low is taken out, take some off the table, or when you have 1 to 1 is achieved. Because now, if you take a 50% entry, your 1 to 1 is achieved when, okay, I give you an example, yeah? You go here, and then price comes down. You do a 50% entry. Okay, this area is the 50% entry. You enter over here. The moment it hits the top mark over here, this is 100% already. That means you already made 1 to 1. So you can take off some of the table. How many percent you want to take off the table? Up to you. You decide. Okay. Do an entry over here. That's one. But if today, and then after that, you can target whatever you want to target next over here. But if you have this, it comes down more to the 61.8% level. That means here, when it hit this level, the 20, the 20% mark, you will get your 1-to-1 already. By the time you hit the 100% mark over here, you get more than 1-to-1. So it's how you want to play this game. You decide. Sometimes people say, if I check over here, I tend to miss more trades. Over here, I tend to catch more trades. Or if you have time, when price comes to this level, don't enter yet. Enter only when you have an engulfing pattern. Also no problem. But make sure they are corrective first. Can. You see what I mean? So the key point for this strategy right over here is to put your stop loss at the swing that which created the impulse and the correction, which means this is your stop loss over here. So even though there is an engulfing pattern that comes out over here, right? Your stop loss is still here. Previously, if this is a H1, for example, your stop loss is here. But now we've changed over here. That means it allows us to say that, hey, I made a mistake over here. It came down before moving up. So before you do this, please ensure one thing, yeah? Price is consolidating. Do not enter if the price is not consolidating. Measure every new swing. When I say new swing, it will be the one that came after that impulse correction. That means there may be other movements over here before, but you do this. Okay? Clear, everybody? If it's clear, can you type clear? Only a very small group is clear. The rest is like, I'm not clear because nobody is replying. Guys, yes, thank you. Now better because my voice is changing. I'm having some slight flu over here, guys. If I can wake up, you also can wake up. I know today is a holiday, but still, this is important. It's going to make a difference whether you make money or not going to make money. Okay, so great. Not clear about stop loss at the left side of the chart. Okay. After I'll bring out some examples for you. Okay, let me bring out one example. Okay, let me show you some examples over here, and then if it's still not clear, what we do, I will give you some. I will bring up the live charts. Okay, so Kelvis, remember this question, right? After we bring up, when I finish everything, y'all can ask. Y'all ask questions, so I'll bring it up. So you'll say you're not so clear with entry type 2, then let me know. I'll bring up examples. I'll put up a live chart and show you how to draw the Fibo. Okay, that will help. Okay, let me show you some examples over here. Now this is 18th of September. I was in this trade over here. So if Euro Aussie corrects down, look for bullish price action at 65.25. Then a move up is expected to test 6650. If you have corrective price action at 6650, then another move up is expected. If not, otherwise it's going to come down, right? So look over here. You look over here. What happens next? Yeah. Now, if you were to put in an entry right over here, 6650. Okay, this is a push up impulsively. Then after that, it started off impulsively, then started correcting already. So I took this trade right over here. Now the difference was this, is that if you were to enter using entry type 1, you put your stop loss over here. That would have taken you up. Okay, I chose to put my stop loss right over here because I still felt that this one could take out, based on the last 3 months, what's really happening. Okay. So the difference was this. If you have taken out your stop loss right over here, if you put a stop loss right over here, sorry, your trade would have been taken out the next day. But here, it came down and then moved up over here. So effectively, at this area, I would have got my 1-to-1 already. And then I protected my trade right over here. I kept, no, sorry. I took out, I didn't protect. I'll tell you why. I remember I was chatting with the trader, and I said, nah, I'm out here. I'm taking out my trade. If you want, you protect. I'm taking out. And I'll show you the reason in a short while why I took out everything. Okay? Why I did that. Okay, so this is the difference between, choosing the right kind of entries that you want employing the right tactics at different times. Is because that one has derived so many stop losses. If I just keep on put that, they take me out and then they go, take me out and then they go. Let me show you why over here I changed this. I'm going to bring up this chart, the Euro Aussie, right? And put a H4, you understand. Now, this was where the trade was, I took it out right over here. Now, let me ask you one thing. Don't because you've seen the answer. Huh? Right up to this point, is this movement up a degree slower than this guy? So in other words, if it's slower, that means this is a corrective move, correct? So if this is a corrective move, I'm only looking for is what's going to happen next. It can sell. It can turn into sell anytime. That's the reason why the moment it took out this high, I'm like, okay, I'm not going to attempt anymore because it can come down. And that's what happened. So if I had kept it and said that, nah, it's going to go up some more because it did not at 65.5. You see the report. What was the report? I told you at 65.5. Let me show you that thing again. Okay. Look at this thing right over here. What did I say? A move is expected to test 6650. Very clearly, I stated that already. But if we have corrective price action at 6650, only another move up is expected. But I did not see that. You see? I did not see that. At 6650, on the 1 hour chart, the sellers were coming in. I didn't see any correction. So that's why I was skeptical from there onwards already. And there you have it. So eventually this will be taken out. So that's why I want you all to have the ability. You can toggle between H1, H4 to see what we are. Like you can see everywhere. And and there you have it. Simple stuff like that. Impulsive, correction, okay, it's going to come down again. This relationship will cease to have this relationship of impulse, correction, and then impulse coming down again, only if for us it has already come to the last wave. This is the last wave already, where we think it could be the last wave already. Then what it can do next is that it move up, and then it can look exactly like this, and then from here it move up already. But there are certain patterns that I look for inside here to think that it could possibly change. It could possibly change and then move up. So I have to really look into this in detail. That, like I said, leave the heavy lifting to me. There will be situations I said, hey, no, guys, even it looks like this, it's still going to go up. Okay. Crispian, you raise your hands, so you can type the question anytime. No worries. You can type. I'll come to you. Okay. Right. So let's go back over here. So now you know why. When it's at 6650, I want to relook at the whole thing again, the situation. How is it moving? Right. Next one, September 22nd, dollar candy. Now this one was really I looked at it and said, why? I need an entry right now. I want to have at least give me an engulfing pattern. So what I say, come to 3440, look for bullish price action there. Look, it came to 3440 area. Okay. Do you see any bullish price pattern over here? None. Nada. Zero. Now this is what, no problem, Crispian. This is what I meant. When you want to measure, you measure the latest one. This is correction. Measure the latest one. Okay, don't measure from here to here. Measure from here to here. Okay, now stop loss. Kelvis, you asked me about the stop loss just now, right? Stop loss, you decide where you want to put it. This is the standard stop loss. That means because this correction belongs to this swing. So you can put your stop loss over here. But if you feel, and this comes after experience, yeah, if you feel that it's not safe for you to put the stop loss over here, you can't sleep, you can always put over here. But know one thing, whether you put here, your degree of risk is the same. So for example, you enter at 61.8. That means if you put your stop loss here, from here, the entire risk from here to here maybe equals to 1 to 3% of your entire portfolio. If you put your stop loss here, from here to here, is your risk is 1 to 3% of your entire portfolio, trading portfolio. Okay, clear? This is how you deal with it with your stop loss only. So Kelvis, I hope I answered your question already. So this part, okay. So this this is important for you to understand. It's just about where you want to put it. So of course, if you put it here, it will take a longer time to hit your target. Because now your risk is bigger, a longer time for you to hit to 1-to-1. Over here will be faster. That's all. So you set yourself. At times I will just do over here, and at times I do shift over here. Okay, so far clear. Now this one is especially at no time. But first you have to establish a key point over here. Is that so? How you want to differentiate between if this is this is taking this is a corrective move, just only compare with this guy. If they are of a different degree, then no problem. You see this moving up in a different angle. The angles, look, this is a steeper angle, this is a wider angle. The thing is, sometimes when I go back to a smaller, when I make it smaller, right, they will look corrected. But when we enlarge it, sometimes it look like everything is like all big. So use this measurement over here, you will be able to see already whether it's how does it look like. Because sometimes when you make it too big, everything looks big to looks impulsive to you, but in fact it is corrective. Okay, so I like to use this scale, then it will help. Yeah. Okay, let's move on to type 3. I do take these entries. So I do take it. Okay, I just do take it, and of late I've been using this really a lot. Really, really, really a lot of these entries of late. Now, either use the 15-minute or the 5-minute time frame for entry. So what you do is that you look for bullish engulfing morning star, the same thing like the H1. I'm not going to complicate matters. Okay, so just now at the 50% and the 61.8%, you can also use this entry, combine it with the second entry, also can. Second entry type. It comes to the 50% level, you won't enter until you see this. Also can. You see the flexibility. That's why I say give you this kind of flexibility. Because if they don't appear on the 1 hour chart, you get frustrated. Hey, why is it not appearing there? Or you can combine all three areas, 2 or 3. You can combine 2, 3, play around, or just leave 3 alone. And you can use combine 1 with 2. That means I will wait an engulfing pattern only if it appears at the Fibonacci level of 50%, 61.8. And then it coincides with the level of the report also. You can do that. So this one, your stop loss, there are 2 types. The lower risk one is you refer to H1 swing for lower risk. That means this correction, I said, and look for these areas to enter. When it comes out, right, it gives you that M15 entry at that level that I gave you all. It comes out that. So either you put a stop loss at the H1's low, swing low. Okay, you can do this. This I call lower risk. Or you can take a higher risk one, whereby you put the stop loss on the M15 and M5 time frame exactly at the bottom of the candle pattern. But you know one thing, there's a plus minus over here. Expect more stop losses before price move your way, but it's extremely rewarding if that is the one that's going to go. Because right now, we're not talking about just making 1 to 1, 1 to 2, 1 to 3. If you talk about this kind of entries, it is sometimes, I would say, common for you to make even one entry to 1 to 5, 1 to 10 things. It can be. But if you want to stay safe, stay within this zone. Then you can see, things move your way in much better. You can see more targets hitting. Because not every time price will move. But if you look for small time frame, I think 1 to 2 is quite easy. But you leave a lot on the table at times. But it's no problem. You're a beginner. Then just do it the way you feel okay with you. Because if you stick 1 to 2, you risk 1%, you make 2% every single trade. Do that 5 times, because you're going to have a lot of these entries. You get a double-digit return. Why not? But do expect one thing: more stop losses, more stop outs going to happen. Okay, so it may be stopped out, and then it goes your way. And you keep out. Just always remember one thing: always win. Try to take more than you lose. That's why I like to do 2 to 1. I don't even like to do 1 to 1. Okay, only under circumstances that I feel that it's not right already, I will probably take out. If I risk 1, my minimum consideration on a smaller time frame, 1 to 1.618. Okay, I'll show you some examples. Now, euro dollar traded down not far from the 1.09 zone. Okay, so for now, what I said, for now, let price make new low and look for bullish price action at 1.0790 and 1.0700, right? This 23rd of August. Coming to our level, you have the first try was here. Even before coming here, the first try was here. You have your 1-to-1, it took you out. It gave you 1-to-1, took you out. So let's assume you didn't protect your trade, right? You didn't protect it, you lost. But here, engulfing pattern again, 2-to-1, you have won, covered the loss over here. So, but what if you do more than that? This one easily 1-to-1, 2-to-1, 3-to-1, probably can give you even up to a 4-to-1. And this is the thing. If you go to a lower time frame, these are your returns, right? So start off first with the M15. Then if you can compare, but always the bigger time frame, they are more stable. So look at the M15 or look at the M5 over there. Another example show you. I'm going to report August. Let dollar yen correct upwards and check out bearish price action at 142.50. That's the 7th of August. Look over here. Here, stopped out. Here, move. So this is what I want to tell you. Look, it gets stopped out, and this one, it moved a lot. Even though dollar yen, we know after moving down, and then it move up, right? So the H1, there's no entry, but I want to attempt, because I know that we are in territories that, probably a big sell will come. So I would like to attempt these styles a lot. And there you can see over here. If you caught this one, this is a 10-to-1 return already on the M5. Yeah. That's why I want you all to understand, to give you all this flexibility. This method of entry, the M5, M15, is only when you see in the report that I usually put this word there. Every single high could be the last high. Every single low could be the last low. If I do that, then yeah, you can actually do this, because once it goes, it goes. So yesterday's report, I talked a bit about the Japan, right? Correct? Yeah, Japan is at 150. And we are actually having that kind of situation that I will be looking into the smaller time frames already for entry, because things can just change. That is Japan at the current moment. Okay, so whenever you hit that 150 mark, I'll be looking already. I'll be checking and I'll be attempting trades whenever you hit that mark. So extra considerations that you should know is this. Whenever price starts to move from our monitored area, if I give you the area to move, my expectation is that it's going to move in an impulsive way. So I give you something, and then it is correction over here. My expectation is going to fly. But if it doesn't, you can either take some profit and then protect your trades, or take out all your trades, because why? It can come now again for the next one. This is what I call degree of flexibility. Okay, so if you remember this, strong, corrective, next one is going to go up. If it's corrective, it's going to go up. That's all. Just remember this. It's going to help you a lot. Okay, I'm going to keep things very simple. Other than that, just leave it to me. Leave the fundamentals to me. so you don't go mental. Leave the heavy lifting to me, leave the areas to me. I'll do all the calculations that's needed. I'll put it in the report. Okay, so exactly 1 hour. I told you this is going to be 1 hour, my sharing. So if you have any questions, please ask right now. Or all answered already. I'm going to drink water a bit. If you have questions, please type it right now. Right now. Still absorbing. So guys, you have my email, right? You can ask the questions, send the questions to me. Now, this kind of stuff here, this kind of stuff over here, you can also use it in the other markets. Okay, in the other markets. Let me show you one thing. Now, this is the report, our report. Let's just go here. Okay. What did I write over here? Oil is currently correcting and upwards move is expected to break 92,916. Did I tell you very clearly? Did I point the arrow very clearly where it's going? Okay. You're going to test 95 next. Want to see the result? Let's go oil. Where are we now? See that? Is this corrective to you all? What happened after the correction? When is it going to move? Leave it to me. You just practice on the direction. That's why I said leave the heavy lifting to me. I'll be doing this report for you guys. You just ensure that you don't go sell. If I say buy, you don't go sell. Okay? Not to say that I'm right all the time, but if you've been following the reports, right, my direction is like 70% of the time, they move my way. Okay? That's a question. Is there any rule of thumb before determining it is a correction or impulse? Because sometimes for correction, it could be sort of impulse first, then slow down. So if it's when you slow down like this, look, this started off very impulsive, correct, Albert? Then what happens next? You push up again. So if it wants to go, it should be moving. Even though it's slow, but it's chugging in a singular direction. This is something that I know, oh, okay, there are a lot of buyers. There were a lot of sellers here, but it was cancelled out by the buyers later on. A lot of sellers coming in, but I know, oh, nah, they are just playing around. It's a corrective movement. So this is the point. So if you're not sure, no problem. I will put it in the reports already. I said look to buy, look to sell over here. So look for it. Now, so in the future, what's going to happen inside the report? You can even use areas like I said, check out price action over here. If it's like checking out price action over here, you can use Fibonacci if it's impulsive, correct? You can use Fibonacci, you can use the M15, you can even, you just play around with it. With this understanding, when you see my report, I believe you're going to see it in a different way already. Okay? So there are many more movements inside the report that you can see over here. I think Candy has already broken over here. Yeah, this one all came down to our levels already. You see, we go up and then it's going to come down. I think it went up and come down already, right? What is this? New Zealand dollar, right? It came down all the way. All these are really heading towards our area. already. But one way, Albert, to let you all know something, if you see this, you compare this and this, then you know it's going to come down, right? So whenever you're not clear with the H1, or jump to H4, then you know what's happening. You're not clear, jump to D1. You know what's happening next. Okay, so hopefully that answers your question, Albert. Right, any more questions? So this has moved our way. This also a move. Yes, wait for the candles to see more, correct. Now this one, I anticipated it to give us one more push before it come down. It didn't. It took out this low and then just went down much more. Okay, so it didn't want to give us another chance. But my general direction, I was looking for this already. If you've been following the reports. Yeah, nice. This one was a nice one. This guy continued to come down some more, and then at the came near to our level 4.2, and then it started moving up a bit. Yeah. So Bitcoin, I think Bitcoin it pushed up and then down, right? So Bitcoin is doing this right now, according to the wave that I'm doing. See this? Bitcoin. See that? What they asked, looked at and said, come down, swing up to 27,500. Yeah, it didn't move there, but yeah, it's doing this. So if it didn't move to this particular area that I'm looking at, there is this possibility still do that. But I'm just looking for that pattern, that swing that I'm talking about. Only it already did that. You see, down, one push up, taking out, and then it's coming down again. So that's once that's happening right now. Natural gas is doing this. It's pushing up right now already. Oh, it's not here. There's natural gas. See, down, push up, down is already pushed up already. Nasdaq is down. Silver, not able to come here. It's going to test 21. How is silver this today? Silver, that came down all the way, coming to the 21 area already. Okay, so yeah, you can see that the majority of them are moving my way. This haven't started the correction. This one I was waiting for it to correct down and go up. It did that, go up already. Apple, what happened to Apple? Did it go to my 167 already? If it did not, at least it broke. Yeah. So if you remember, this was the corrective move. I say will turn into a correction, and then you come to yeah, it's near there already. So we'll see. See? So that's why I said leave the heavy lifting to me, and then yeah, just follow. So but before that, you know how to use the report, okay, and go. So this one said move is coming down. I think this one also tested 12120. What happened to the broader market, the China? Yeah, correction down. This one has already broken down. The down move all done already. So yeah, everything is heading towards our way. So you just follow out. And then if you have any questions, this is my email. Send it to me. Okay, and hopefully, things your trading will improve. But as usual, give me the feedbacks, and I'll see. If not, for me is that I can only improve on the whatever I'm doing if you give feedback, because if not, if I get reports that people are doing okay, then I won't change. I won't rock the boat and say change, look into something. So there are feedbacks. Actually, this time there wasn't any feedback. It's just my personal feeling. I saw the H1 not appearing much already. That's why I want to introduce something different for you guys already. Okay, so I guess there are no more questions. With that, I wish everybody a wonderful holiday today, and I'll speak to you all soon. Okay. So thank you very much for taking your time to attend this simple sharing on a holiday, and wish you all the best. Okay, welcome everybody. Thanks for all the thank yous that's pouring in right now. Thank you very much, and talk to you all soon. Bye.